Hello, everyone. Welcome to this panel. We have a kind of a star-studded list here of VCs from the US as well as Europe, kind of looking at early to late stage investing, private and also crossover public. There's a lot of experience on this panel tonight. So just in terms of kind of starting off, maybe I will hand over to my colleagues here to start introduce themselves. But before I do that, I'll just give my brief introduction. I'm a senior partner at Novo Ventures. We are part of Novo Holdings. We are investors in early to late stage life sciences. Tim.
Yeah, hi everybody. I'm Tim Haynes, Chairman and Managing Partner for Abingworth. We have just raised our 13th life sciences fund, actually our largest. And I guess what differentiates us from others is the breadth of what we do, and that's both in terms of geography, being on the East and West Coast. And while principally biopharmaceutical, we invest across the piece from early stage through to publics. We also have a separate fund that invests in something that we develop called clinical co-development. So that's a little bit about me.
Great, thanks, Tim. Otello.
Hi, Otello, Stampacchia, Omega Funds. So similarly to Abingworth, we are present in both Europe, in Switzerland, and US in Boston, covering the pretty full spectrum from company creation to pipes, mostly in therapeutics, though we have dabbled in other things.
Great, thanks, Otello. Bibhash.
Sure. Hey, my name is Bibhash. I have been with New Enterprise Associates as a principal for the last 5.5 years, investing mostly in biotech, stage agnostic, geography agnostic. And prior to that was with AZ and Johnson & Johnson.
Great, thanks, Bibhash. Dennis.
Hi, my name is Dennis Purcell. I'm a founder and senior advisor to Aisling Capital. We're about a 20-year-old fund based in New York, generally late stage life sciences companies.
Thanks, Dennis. Hubert.
Yeah, my name is Hubert Birner. I'm managing partner and one of the owners of TVM Life Sciences. We are one of the long-standing venture capital firms in the German-speaking world of Europe, with a significant presence in North America. We just closed our 8th fund at about $500 million last summer, and we are investing the two-pronged strategy in very early stage, asset-focused therapeutics companies, and we're also investing growth equity in late-stage companies, both on biopharma, medtech, and diagnostics.
Great. Well, welcome all, and thanks for joining the panel today. So I think I will sort of set the scene with a few topics, which I think would be great for this panel to discuss. Bibhash, please step in and also mention the things that are relevant, which you're excited about, and we could cover today as well. So. On my side, from the perspective of Novo Ventures, I mean, we've been seeing a lot of IPO activity. Of course, it's not a secret to this audience. We are seeing record number of IPOs last year. The activity has continued at record levels into the early part of this year. One of the things that we kind of worry about is the bull market has been going on, and it just seems to be getting more and more steam. Will this continue? And if it doesn't, what next? And so it'd be kind of interesting to get the panel's perspectives about how bullish they're feeling about this market and how it's influencing what they're doing. The second part, I think it'll be kind of useful from my end to sort of just to touch base on is in Europe, on this market, we've also been seeing a lot of NASDAQ companies heading towards NASDAQ. So last year we counted there were about 12 or so NASDAQ IPOs in Europe, out of which and then there was only one company that went on public on Euronext that we could spot. So there's a huge change from, let's say, in 14-15 when there was a lot of Euronext IPOs that were happening. So is this a trend that is set to continue? How do sort of the folks who are investing in European companies think about taking companies public on NASDAQ, what needs to be done there for the companies to prepare for that, and is Euronext an option? Be kind of good to get that perspective. And the third topic I had on my list was really around, this environment is extremely strong. There's a lot of activity, and a lot of funds have been branching out into different ideas, new ideas, evolution of their strategies. And it'd be kind of interesting to hear from the panel about how, as they've seen this market develop, how their strategies have evolved, and sort of new things that they're bringing, or for new focuses that they're bringing to their firms. So I'll stop there. Bibhash, maybe there are things that also you'd like to bring forward.
Yeah, no, let's get started. Fantastic list.
Okay.
And let's get started with this. We'll jump in as the panelists to make it more interactive.
Fantastic. So maybe I'll start with Tim. Tim, this IPO market, is this going to last into 2021 and beyond?
Yeah, predictions are hard, especially for the future, as the saying goes. Look, I think I certainly, at the macro level, there are some concerns about inflation. I actually think they're more cost push inflation rather than fundamental capacity issues, and I think you're going to see unemployment rates probably remain quite high for some time. So I'm not I'm not as concerned as others regarding inflation, and I think inflation really is the bugbear that could pull a lot of this down, particularly growth companies and biotech companies. So I remain pretty bullish on the public markets. I think we'll move around a little bit. I think there is the haves and the have-nots very much, and COVID's just underscored that. And we are all lucky and privileged to be in biotech rather than in ocean-going cruise liners or some other areas. We shouldn't forget that. But even within our market, it really has become US dominated, and obviously that's both private markets and valuations are going up, but the public markets is just quite remarkable, and this has been a very long bull run. Goodness, it's probably arguably 8 to 10 years that the public markets have been open, and last year was exceptional. There were 2.5 times more IPOs than there were in the year before. About 50 billion raised either through IPOs or secondary fundraisings, and most European public companies raise money on NASDAQ. So it's such a NASDAQ-oriented world. And I think one of the things that is quite intriguing that we should probably spend a few minutes on is what are the different criteria? And clearly there's different culture that, a lot of success is feeding on themselves, but I wouldn't underestimate the roles of these sophisticated crossover investors in the success of IPOs and indeed the number of IPOs. If you look at last year's about 80 IPOs on the US, biotech IPOs, of which 70% of them, so over 60, they had a number of, they each have one, if not more, of the sophisticated crossover investors in them. These IPOs had a much higher valuations, upticks were much higher, and the post-IPO performance was nearly 100% uptick compared to 60% in the others. So this crossover piece, I think, should not be underestimated, and I think it does a lot of things. Obviously, people investing in crossover rounds prior to IPO are committed to the IPO, so that means there's a significant underwriting of the IPO piece. I think it gives more generalist investors real confidence that with sophisticated investors, and this does apply to SPACs as well, and we'll come on to that, I'm sure, but also they're likely to be slightly more long-term than perhaps other groups who are looking for a quick turn. So I think that's a real, it's been around for a while, but I think it's really driven, or is a key part of the IPOs, and actually is something for the most part that we miss in Europe, as well as not good markets, we've not made money, and there's a cultural lack of risk appetite. So I think that's certainly something that I would put my fingers on. But we feel it's going to continue. I think we've got 6 IPOs teed up. We did a number last year in the US. As long as we can look, certainly through the summer, we probably think we're going to be okay. and that's certainly driving some of our considerations and some of our investments. Europe remains a conundrum, but just the final point is, I think the arbitrage, the pre-money valuations on private and public companies, the difference between Europe and US is increasing significantly, and that really is an opportunity for groups like ours and many others on this call who are able to look at both markets and potentially move or take advantage of NASDAQ for European-based companies.
Great. So maybe Otello, you've been pretty active, so just love to sort of get your perspective as well. How, do you share that idea? Any concerns on the horizon? Is this bull market continuing?
Yeah, I also want to be respectful of Hubert, who I think raised his hand, but I'll comment on this. And then, no worries. I'll comment on this and pass it on. Far be it from me to be respectful at all times. So so I agree with pretty much everything actually the team has said. So it's always wonderful to follow him. What? No, pretty much not everything. I mean, so a couple of things to add to the mix. I think there's just a very different capital market structure overall, US versus Europe, so stating the obvious there, but the role of crossover is super important. There is an increased role of these very large ETFs in dictating trading volume, even ownership. I do think that is a concerning element that adds, at least from my perspective, a bit of a slightly darker view of the future. If the volatility that is associated with these instruments goes up, that might affect the overall IPO market. And not to mention any names, but ARK, which is a very large ETF, most of you would know, yesterday had a 456 million withdrawal, and two names that we follow where they are a very large shareholder went down 20%. So again, that doesn't necessarily affect directly the IPO market, but that plumbing eventually would. I am hopeful that, on the one hand, I'm hopeful that this gap and value arbitrage between US and Europe will continue because we benefit from it. On the other hand, I think Europe really should get their act together and put some kind of coordinated measure to have capital markets that are deeper with more liquidity, and where more specialist investors, which inevitably will be from the US at the beginning, can play. Because without that, I think European companies, I have to say for the time being, have no choice. If they really want to raise capital at a certain scale to develop programs of a certain scope, there's really no other choice. I'll pass it on to Hubert.
Yeah, I thanks, Otello. I wanted also to react a little bit what Tim said, which is in line what this panel more or less did 6 months ago. So what I'm observing right now is that the few European companies that get their act together, even as preclinical stage companies, and get crossover investors in early on, are able to command incredible prices and valuations in NASDAQ IPOs while they are still preclinical or early phase 1, phase 2 clinical. I mean, you may have followed the IPO for Vares a couple of days ago or 2 weeks ago, and this is a Swiss company that has an earlier stage molecule that's developing, but with a who's who of the American crossover community, and the company valuation is north of $1 billion today, right? And it comes along the lines of what Tim said is this the tip of the iceberg? Can we go further from here? Because if you remember, to think about a preclinical stage company being worth $1 billion, you have to go back a long time in history when that happened before, right? I would say 20 years probably or longer. So what my outlook is for the market is a little bit more skeptical, because now, for valuation reasons, many of these high value, highly visible crossovers come to Europe. They completely understand the arbitrage opportunity that Tim was talking about. They get involved in taking these companies public on NASDAQ and others. But don't forget, these are massively risky companies still at that early stage. And what I was saying at this panel last year, the IPO wave you have seen was more mature companies last year that have the chance to succeed and don't disappoint investors, especially the generalists that follow these people. But now all of a sudden, for all the reasons that the panelists have discussed, people are investing in much earlier stage companies at amazing valuations, and the risk of failure and then disappointment and withdrawal of that capital from the market per se is much higher. And we have seen this in the demise of the Neue Markt or the genomics revolution. Remember that we have seen this in 2001 and 2 and 3. So this is something I had not expected to happen so quickly. Mm-hmm. And this is something we need to follow, because this may really impact the validity of the public markets going forward along the lines what Otello and Tim had suggested.
Great. No, I think very thoughtful comments. Dennis, add, how are you seeing it? Is this going to become a concern? I mean, the US has been very much preclinically focused on the IPOs, and big ideas, big stories kind of coming out with extraordinary valuations. Is this going to sort of eventually the data will catch up? What's your perspective? Yeah.
Sure, I appreciate everything that Tim and Otello and Hubert have said. Adding to what Otello said about the ETFs, if you look at kind of the indexes like the Russell 2000 or whatever, so much of the Russell 2000 now is biotech. Yeah. So we're really subject to some, getting jerked around now. And in some way, if you look at kind of, we're some way in the middle 10 years of a 7-year bull run. So we have to wonder, but if you look, 95% of all preclinical biotech companies that ever went public, 95% of all preclinical companies that have ever gone public have gone public in the last 18 months. And you're looking at valuations that are north of $500 million on very early preclinical data. So one of the, so we have to ask ourselves, is it different this time? Is this time different than other times? Different than 87? Is it different than 2000? Is it different than 2008? So I think one of the things we're going to have to watch is, are these preclinical companies going to live up to their milestones? Mm-hmm. They went public on a bunch of milestones. And we do have a whole set of dry powder for sure. Whether it's the venture capital community or the family office community or not. But I think what we don't know yet is that, are there a bunch of fair weather friends in the industry right now? Everybody loved biotech for the last year. And are they going to stay with us over the period that we need them to stay with us, which is 5 or 10 years? Or are they going to leave at the first sight of some problems? I don't know. Yeah. There's a lot of money we need. You take a number that I calculated, and Otello might be able to contradict me on this, but I looked at Kendall Square. Yeah. All the life biotech companies. Otello, please contradict me. All the biotech companies.
I'll let you finish first, but go ahead.
All the biotech companies in Kendall Square, if they were working on 2 products, which is probably fair, most people are working on more than 2 products, and if they could develop those products at 1/3 the cost of what the industry says they can do, so 2/3 cheaper than what the industry says. So just take the number of companies, we know that. 2 products, probably fair. 1/3 of the cost. What we need to raise in Kendall Square is $1.5 trillion for the industry.
Well, there's a lot of cash around, but that's extraordinary.
No, that's
probably what's
Kendall Square. That's Kendall Square. Yeah. That's not gene therapy. That's not cell therapy. That's not Europe. That's not New York. That's not California. That's not anywhere else. That's in one place. So one of the things that, when we start looking at the industry, what we've raised so far, the capital needed going forward is going to be pretty extraordinary. But at any rate, it's been a great year. And one of the things about the follow-on investors is that we started our business as a late stage investor because nobody would do it. And as we've talked about before, Series A's now are $100 million. So everybody is playing in everybody else's lane. So we'll see.
I don't know whether Otello wants to push back.
Yeah, no, Otello, please step in. Yeah,
and I've got a comment too.
No, I don't want to be disagreeable. I mean, I would love to see the basis for that calculation before I push back. So they're
just numbers. It's not a calculation. You don't need to do anything. Just add the number.
I can also pull numbers out of thin air and say that I weighed 120 pounds and I'm 7 feet tall. Obviously, it's not true, but whatever. That's fine. So I think a couple of, again, I don't disagree that the capital intensity overall, maybe not 1.5 trillion, but I think it's going to be massive. So I think the point stands on its own. So the couple of things I would like to add, and some of this was implied into Tim's commentary before, we are likely going to be in a low interest rate environment for a while. So that's a consequence. As a consequence, there's a scarcity of growth. And I think we just saw two companies, Moderna and Pfizer, BioNTech rather, basically saved the human race, quote unquote. I'm exaggerating, obviously, but not too far from the truth, with technologies that honestly nobody thought could replace traditional vaccines. And those two companies, I don't know the split between BioNTech or Pfizer in terms of the economics, but Moderna will sell, according to analyst reports, $15-20 billion in sales this year. And likely, looking at the way this is going, they're going to sell booster shots for a while. So I think people look at this and say, okay, what am I going to invest in? Airlines, hotels, restaurants? Probably not, at least not yet. And then you see the retail frenzy that has happened. So some of this is absolutely exuberant. But at the same time, I have to say, in conversations with, unfortunately, too many politicians over the last 12 months, there is a real shift in the way healthcare is perceived now as a strategic asset, right? And when you look at, again, throwing some silly numbers that I think already throughout last year, Hubert, but US spends 800 billion plus in defense procurement a year and 7 billion on the CDC. Obviously, those numbers don't make any sense. So I think, some of that plays into the retail frenzy. Some of this industry is now more important than it used to be. But yes, I think we need to prepare for some potential capital scarcity to come up. And the one simple suggestion we tell all of our companies, have 4 years of cash. By the way, once we tell European companies that, they freak out. We say, what do you mean 4 years of cash? We never had that in our lives. I say, well, maybe you're talking to the wrong investors.
Just to pick up on
that. By the way, Otello, well said. Agreed.
Just Otello did forget the Oxford AstraZeneca vaccine. While AstraZeneca's name is on the label, it's actually an Oxford, and I'm in Oxford. I've just joined the University Innovations Advisory Board as well. So please,
congratulations!
I've got to raise those guys, and it's a biotech. It's a biotech origination, which I think is spot on. The point I was going to make is just to Dennis's point. Where would you find 1.5 trillion? Well, actually, I've got a place for us, and it's quite a pertinent place, because if you look at pharma's balance sheet and access to debt, they have just under $1.5 trillion of cash. And I think the other thing that people that does relate to public markets and where we are in the sector is the structural change that's gone on over the last 10 to 15 years, not always obvious, but whereby pharma's gone from 20 years ago, less than 20% of their pipeline was in-licensed, whereas today it's well over 65%. And they are using their balance sheet to acquire assets. They've done it less so last year because they're competing with public markets, but there's actually a huge amount of cash there. They are coming earlier too. And, we and many others have sold companies even before, products have gone into the clinic. So I think we shouldn't miss that. I think that's another fundamental piece of the demand equation that really has changed. We think there's been a re-rating in biotech, more obviously represented in the public markets. But I think the whole pharma-biotech relationship, and as Otello alluded to, goodness, this year's demonstrated a couple of things. A, the resilience of pharma, and I think they're going to come out of this thing with a much more positive view in all respects. And may help pricing, although we've got to pay for this thing. But the other thing is obviously the role that biotech has played, and in our fundraising, I'm sure Hubert as well, we've got a completely new class of investors because they've seen the resilience of the broader sector, and also there's an increasing kind of philanthropic view. I don't want to put too much store in it, but many family offices and others are seeing, goodness, we can make some money here. But my word, I'm feeling really good that I'm actually investing in this latest technology. So I think there's really something very interesting going on here.
Great. I mean, this is an important question, right? So is there a secular change happening? So it's great. I mean, we started the conversation with worrying, right? Is this something that could basically, is a lot of money chasing, a bubble, but maybe there's a secular change happening. And Otello talks about saving the world, right? It's a big claim, right? But there's some actual truth to it, right? I mean, this is biotech innovation at the beginning, right? Initially, lots of naysayers, smokes and mirrors, and then it comes and that technology then has its day, and it shows it's working. And we've had this with CAR Ts, with the extraordinary results that they showed a few years back, which was that waves of innovation. Maybe I'll bring Bibhash in here because what everybody to be involved. So Bibhash, I mean, do you agree? Is there a secular change happening? What does that mean for early stage?
I absolutely think there is a secular change happening. And, the part of the capital that I think has flown into biotech is because investors need a place to park their capital, which they historically perhaps have done in the airlines industry. So that's the push away from non-healthcare into healthcare. And of course, the pull in has been the spectacular successes over the last couple of years, Moderna getting a lot of generalist spotlight, but there have been multiple others. So overall, the pull of capital into the sector, the inflow of capital has certainly helped. Now, so that indeed points to a secular shift and a more shining of the headlight. However, here's where I get stuck with this line of reasoning. Sometimes, and would love to have a discussion in the panel on this. The fundamental probability of success of drug development of a particular asset has not changed. So the need for capital is projected to be expanded because of the number of assets in development. But will there be drugs at the back end of this? So that's one sort of fundamental question. The second question is, how will investors take advantage of the situation? Do you still invest in promise and jump ahead and multiply capital? And how does the more of the generalist investors who are looking more towards healthcare look at this? Would love to understand how the panelists think about those questions. So, to Tim's point, the demand side as well as perhaps the supply side, when the supply side hasn't fundamentally changed that much or shouldn't change that much.
Yeah, so maybe Bibhash, two comments here from Germany. One element that I consider extremely important for general investors is the observation that the shift in the population in believing who can actually solve the healthcare problems of the population has changed. Most of our governments have failed miserably in dealing with the corona situation, and this is obviously publicly known, and every country has its own stories and its own problems to deal with. And all of a sudden now we have pharma, who was the industry where, remember, we were all there a couple of years ago, everyone was bashing on us on the development costs and drug prices and all the rest of it, who took the bull by the horn and have made a big difference in changing the world. And if you had asked me a year ago when we went into lockdown that we would have 3 approved vaccines by now in Germany, I would have said you're out of your mind, right? There's no way of doing that. So for generalist investors who look at other things like real estate and so forth, and Tim, one big experience in my fundraising was that we now have a lot of people that made a ton of money in real estate came back and invested in our funds. I had never seen this before. You probably had a similar observation, just as a side note. But it shows you that this is a sign of credibility for the industry and confidence that will keep the generalist investors interested. A lot of them remain quite careful, and many of them know that nothing is certain in our lives. But I think the miserable failure of governments, and Otello, you and Dennis, remember we had about our big topic in September was what will the US elections do to the public markets? Nobody brought this up anymore tonight, right? This is a moot point, right? Because politicians should stay out of this anyway. And then the second point I wanted to make really is that from a credibility perspective, I really feel that pharma has played a very good role in this process in playing down the role, as long as there was a vaccine in sight, as long as there was an opportunity to be seen, because one could have also expected that there would be a lot of false promises in the dark days of the crisis, right? We're going to have a solution, but fortunately, unlike in other industries, nobody stuck their head out and spoiled the water. And I think this all together, for me, created the credibility and the stability going forward. I think we will see a certain volatility in the marketplace. Some people would say more than we expect, but we're not going to go back to the bad days of the public markets that we have seen before because of that dynamic. So I think there's no reason not to be optimistic, right? Also for European companies if they play it well, and that roller coaster is much less of a roller coaster than it used to be for us going forward.
Great. Any other comments on this, Bibhash?
Yeah, just to have a go at Bibhash's question around, what's changed on the supply side. And I think one of the reasons this structural change between pharma and biotech has happened is because the biotech model is really starting to come of age, not only in terms of smartly, efficiently, cost effectively coming up with new molecules, but also now demonstrably getting them to market and really, driving significant sales and meeting huge unmet need. So I do think, again, there's something really pretty significant going on here. We are reaping the benefits of genomics, precision medicine, use of biomarkers, smart clinical studies, stratification, a lot of outsourcing capabilities. You don't need to build a biotech with 100 plus people. You can build it with 25, 30 people and use really sophisticated groups to take you through the various stages. So I do think that has changed. And I think that will ultimately be reflected in a much higher success rate than we've seen traditionally. And of course, a lot of the things, smarter clinical studies, smaller clinical studies, at least what a lot of biotech is going after is not, the huge GP cardiovascular anti-infectives. That's another issue that we still need to solve as a community. But I do think, the biotech ability to be much more focused, much smarter, I think is starting to be seen, or certainly starting to be seen by biotech. So I think there is a hope that the supply side will start to be more productive. The failures less, to Dennis's point. There will clearly be some, and we've seen there's always biology we can never figure out. I mean, some of the Bluebird data we saw recently that looks like unfortunately may have some role in generating AML in SCID patients, as an example. I'm not just picking on them, but I think it just tells you that biology is always a bit of a conundrum. But I do think there are a number of elements on the biotech side that really are changing our ability to get these drugs through, and therefore increase the likelihood that there'll be more successes and fewer failures than we've perhaps seen in the past.
Great. Well, maybe we just sort of, I'm conscious that Otello is going to leave us in 10 minutes, so he has a hard stop. So maybe we sort of just change the direction of the conversation a little bit towards, in terms of our industry, which is kind of obviously we're VCs, but we also are evolving our models as the market changes. And there are some new developments in the market, like SPACs are on the table, and we might have some CEOs in this audience, board members, who are thinking about, my company is getting ready to go public. Should I consider an IPO? There's banks telling me about a SPAC. Should I consider this? What's the idea? and then some of us have actually launched one. So Otello, I hear you have a SPAC, so maybe you want to tell us about it.
It sounds like a medical condition, isn't it? You have a SPAC.
I'm sure it's one of the many medical conditions that I have, I guess. But no, so maybe there's a bit of a story to that I'll try to be succinct, but tell anyway.
Yeah.
So one of our private companies actually was approached by a SPAC, several SPACs actually last summer. And long story short, they completed the merger and the de-SPACing. So there were a number of things that we learned from that process, being on the receiving end, which I think have been quite instrumental in us making us think about it and eventually deciding to do it. So we listed in January. The couple of things, there's multiple elements to discuss. I don't want this to be a dissertation on SPACs, but one element is the certainty of execution. You have a basically private negotiated transaction at a given price, which is not subject to the vagaries of the markets, and all of you know, and many of the people on this will know. You start the IPO process. Usually we proceed with a crossover, as Tim mentioned, which I think is good practice actually. And that's, by itself, the crossover is 4 months at best. Then the IPO is another 4 to 5 months on top at best. And at the end of the process, you might price the week when somebody assaults the Capitol, North Korea launches a missile, somebody sends a stupid tweet, whatever. You see I'm gravitating towards dictatorial behaviors. So I think that uncertainty, it is completely removed by the SPAC process. So compressing the timeline, certainty of execution, you obviously can curate the investor list. So I think these are instruments that made, at least to us, the tool very much worth exploring. We were pretty overwhelmed by the response from the investors in the SPAC, which is obviously a concerning feature perhaps. But I think there's a scenario where those instruments are here to stay because of those advantages. So again, it's our first, obviously. We haven't found a merger candidate. I encourage every company that should probably read our S1 first, but to contact us. I do think there's a scenario where this will be here for a while, and I think we wanted to have it. Yeah.
Great.
You're great in orange with your orange jumpsuit on. Yeah, having just promoted that, but that's fine.
Dennis, should a company consider a SPAC versus a traditional IPO route? I mean, is the aftermarket performance going to be different of these things? If IPO and crossover and all that, there's a long process, but it creates a market. Is that a shortcoming of going towards with a SPAC?
No, I agree with what Otello said right now. If I were the CEO of a private company, I'd actually go there. Otello, I will say something that you won't agree with. So, some people call it a compensation scheme disguised as an asset class, but we can talk about that.
We won't talk about that today.
But what Otello said is exactly right, and it's coming closer and closer to look like an IPO without all the risk of an IPO. So I think the question is going to become that and I didn't do one because of this reason. I think there's a lot of SPACs out there, and there was so many IPOs in the last 2 years that, I think it may be, I think Otello will probably find one that's good. It may be difficult to find the right ones at the right valuation, because the downside to the SPAC is that if you don't find the right one and the investors don't vote on it, you have to give the money back, and you have some upfront costs that you lose. But that's a detail that we don't have to talk about here. But if I were a private company and I was a decent private company, I go right. I absolutely do it. I go for all the reasons Otello said.
Just to add to that, some of our companies are looking at SPACs and been quite skeptical, having seen the first SPACs of whenever it was 10 years ago. I think that it's worth kicking the tires. We're certainly urging them to go for high quality SPACs, and by that I mean making sure you got people that understand the market. And Otello falls into that category, I have to admit.
So maybe guys, maybe it's worthwhile commenting what is different, Dennis, from 10 years ago. Why you recommend to your companies to look at SPACs right now, Dennis? What is different? Because 10
And
years
also-
ago,
Because 10 years ago, they weren't an accepted asset class. Today, you have really first-class investors. You have Otello, you have other people that are first-class investors that are raising these SPACs. And one of the things Otello did not say is that his investor base is also first-class investors. They're not just kind of, fly-by-night people. 10 years ago, they were fly-by-night people. You didn't know what you were getting. Today, if you do, forget about Otello, Casdin Capital, Ecor One, Get Perceptive, any of these guys, their investor base happens to be the investor base you want for crossovers. So it's really becoming a much more accepted class. I mean, I halfway kid about the. I don't really. I mean, the compensation is crazy, but that's coming down.
So
I think just very quickly, I think the other thing that has changed is there's starting to become pressure on the economics of SPAC owners as well.
Well,
There's a lot of SPACs out there, and that really so competing against a hot IPO market, for the other reasons we've talked about today, differentials in economics valuations are narrowing significantly, and obviously there's a time limit.
Just to clarify, sorry to interrupt, our SPAC has no warrants. I wouldn't recommend to anybody to do a merger with a SPAC with warrants. The economics, and not just the economics, the flow back after the SPAC, it's a mess.
Yeah, and that was my point about the compensation things. They're getting closer and closer to looking like an IPO. So I think they're here to stay. I think they're here to stay, and the question will become for us in, I don't know, pick the number, 15 to 18 months, 15 to 24 months. When we see what happens, whether we can find a target or not. Otello has to now go up against a whole bunch of other people.
But Dennis, I remain cynical, right? Because these people that Otello is chasing will also have eventually the option to do their own IPO, right? And that's
the argument against you, what I'm saying is that all the good companies have already gone public. They went public in 18, 19, and 20. Yeah. So Otello is just chasing second-class companies.
I think I worry about. I want to see the performance. I want to see the aftermarket.
You're not going to know that for a couple of years. The question.
No, exactly, and I want to compare.
The question is there too many SPACs chasing too few good companies? That would be Hubert's case. I'm kind of on Otello's side, which is, I think it's a great alternative to an IPO. But that's kind of the stock market.
They may be great companies. The question is, you might overpay. I mean, I'm wondering if we might change from a bake-off to a SPAC-off, right? Where
that's already happened. I think I want to be respectful of Bibhash because he's been trying to say something for about.
Sorry. 50. Yeah, please, Bibhash.
No, thank you. So this is fascinating, and completely agree with this whole, once again, demand supply question, right? You have this captive SPACs looking for assets. Do you think, I go into a more fundamental question, just given the history of SPACs. So normally you would go out and, in a non-healthcare sector, adjudicate how good or bad a business is based on ARR or some other revenue metric. We can't do that in biotech. How do you then, fundamentally distinguish between what's a good asset versus bad, apart from the science itself, which is, generally the basis of putting in a long bet in a company anyways?
Bibhash, can I make a comment on that? Because because right now, Otello's shareholders are people that know how to make that bet. It used to be SPAC, they used to be SPAC holders only, and they didn't know whether it was a good company, a bad company, or whatever. And right now, the holders of the SPACs kind of can make the bet. So if Otello makes a terrible bet, they'll just say, forget it, give me my money back. So I think Hubert, and that's one of the reasons why it's somewhat different than 10 years ago. And that's why it's a more mature asset class, I would say, than it was 10 years ago. And Otello, you have one. I don't have one right now. I mean, I know about them, but correct me if I'm wrong on any of this stuff. But that's what
you're absolutely right. The investor list
is
is exactly as you say. And in fact, we are quite overwhelmed by the demand from specialized healthcare investors. But yeah, I think that Dennis is absolutely right. I don't like to say that very often, but he is.
So effectively, then there is no difference and potential advantages to going the SPAC route than going the traditional IPO route.
I'm sorry to interrupt. That's inaccurate, and I think Dennis is right there as well. That the economics are not entirely the same. So we actually run. Sorry, to take a step back. So if you take the economics and the dilutions of a company does crossover round and then IPO and then maybe even a follow-on round later on, because the SPAC can do all that in one single transaction, then the economics are virtually identical, but in much shorter time frame. So if you just take the pure, IPO versus SPAC, the SPAC might have, especially, SPAC with warrants have an absolute disadvantage in terms of those economics. Even a SPAC without warrants, you might have, whatever, a few percentage dilution. The counter argument, I want to be completely transparent here. The counter argument you're going to hear, mostly from investment banks who don't do SPACs, I'll be honest, is that, are you going to get analyst coverage because you're not doing, because the economics for the banks are a lot less. A bank, Dennis would know, banks on Wall Street have a wonderful monopoly with 7% fees charging an IPO. A SPAC is a lot cheaper from the fee point of view. That's real money, by the way, for management teams. I would say that argument is weak at best. If you're a great company, and that is really the trick, if you're a great company, you're going to get analyst coverage. But again, if you take a fairly purist, and I would say not fair comparison of this is an IPO versus the SPAC, the math is a little bit worse for the SPAC. If you take crossover and IPO, is at least equal and maybe advantageous.
Yeah, and Bibhash, the other argument that Otello didn't said was that if people thought if you did an IPO and you're worth 400 million, if you did the SPAC, you would only get 350 million. So you took a discount to your valuation. And I think that discount is starting to shrink a little bit. So that's the argument. The trade-off for getting it done quickly and all that kind of stuff is that you take a lower valuation. So that's why you wouldn't do it. But Naveed, then you run the risk of the 9 months or whatever what Otello was talking about.
Yeah.
So Otello, sorry, go ahead.
Yeah. So just as a summary, let's think about what we have learned from the panelists in the last 45 minutes or so. So number one, secular change happening, positive spotlight, lots of supply as well as demand, including fundamental changes, and now multiple options and pathways available with increasingly, what used to be non-traditional becoming more traditional, including in economics, right? So this is actually perhaps the reason behind the ebullience and the positivity, because all those elements are positive, is it not?
No, it's remarkable. I think the more you think about it, that there are some really fundamental secular aspects to what's happening, which underpin some of this very long bull run that we've been having. And that continues. I think we've got another 7 minutes left. So I think maybe for that.
Can I just say one thing about what Bibhash just said, what Otello said earlier on? This is an industry, not to exaggerate, that just saved mankind. You want to know why we're investing in it?
Yes, that's it. I mean, at the end of the day, I know ESG and impact is a big thing, but this industry defines it in that respect.
Get more ESG than that.
No,
I'm conscious, Naveed.
We've got 5 minutes left. I think there's maybe
just a very quick question. We just need to make sure that we've covered the European landscape here.
That's exactly I'm coming to. So I think this is a European conference, and we should not focus a little bit on this particular aspects of Europe. So one of the things that I've noticed is that a lot of the activity has been of companies in US going public very early at preclinical levels. That we talked about that. In Europe, I haven't seen that yet. I've seen a lot of IPOs happening onto NASDAQ of clinical stage assets. And you mentioned Hubert with Pharvaris as a something that's kind of phase 1-2 pharmacological, but I guess a proven mechanism, oral presentation. But are we going to? What does the panel think? I mean, should a European CEO who's coming up to the clinic has a platform, because we have quite a few platforms here, and it has a bit of a pipeline and a story. Should they be really thinking, being more ambitious about going public earlier in Europe?
Yeah, maybe just have I mean, there's two questions there. One is a foreign filer on NASDAQ.
Yes.
And I do think, the bar is slightly higher for European de novo flotations on NASDAQ. And if the tide does go out, it's invariably, if you look back over time, the foreign filers that do get whacked. But, it remains the primary source of public capital, particularly for secondary fundraisings, where even if you can get out on European markets, it's very hard to raise the secondary quantums of capital that you need to build sustainable companies. This is really tilting at windmills, in terms of changing European markets. But there are some signs, and I know, the London market is making a lot of noises about making listings easier, as well as trying to become the European home for SPACs as well. There's a huge amount of capital in Europe. It's a difficult task, but there are some signs that there's increasing interest in the biotech space. We just need good markets, and we've somehow got to pull in a broader retail and institutional investors into our space. So that's just a few words about Europe. There's a few encouraging signs, but actually for the moment, the US markets, private and public, are pulling away. I think to Otello's point, what that does mean is I think the valuations in Europe will become increasingly more interesting, given the science here is great, and there's increasing maturity of the business this side of the pond. So I do hope there'll be more capital be triggered. Whether we can really get some capital and a single NASDAQ-like European market, don't hold your breath, I think. But I think that would dramatically change European industry, but it will require an awful lot of moons aligning.
Yeah, we're seeing that right now. There's not much activity. Everything seems to be NASDAQ focused. The predominant activity is NASDAQ focused. So I think this is a challenge for the local exchanges, and some of the secular, the sort of structural issues with the local exchanges seem to be a perennial theme, which don't seem to shift in a big way. But it's good to hear that there are some shoots there which could change that. But back to, the question. Hubert, should a preclinical company in Europe think about going public on NASDAQ?
So
or Europe?
The clear answer is no, because we have, despite the difference to the US, we have one of the most abundant areas of venture capital in Europe right now. We have a lot of big funds or established new funds that raise significant amounts of capital. And I would like to remind you all, back in the day when there was no venture capital in the 2005, 6, 7, 8, 9, 10 timeframe, and people went public desperately on whatever was left of the public markets. And these companies died miserably a couple of years later because they couldn't get the money they needed in the follow-on financing. They didn't get the coverage. The investors were, the analysts were not interested in a phase 1 or phase 2 asset all of a sudden anymore. They wanted to see revenues and that kind of things. So I think the great news is that, yes, on an occasional basis, companies like Pharvaris with a great track record and a great investor base will show the world what's happening as a preclinical stage company going public. But at the same time, if you look at, I always like to look at the different language areas in Europe and see what funds have been raised in the French-speaking part, in the UK, in the German-speaking part. and also funds that in the US that looking at Europe to complement what we're doing, like Dennis's funds and others, are very reassuring. So I think try to stick a little bit to the knitting and boost your balance sheet with a set of very powerful investors, and then explore the public markets on NASDAQ later on. I think I'm a bit old-fashioned here, but that's probably the way to look at it where we are standing today.
Wonderful. I think we're out of time. Bibhash, maybe some final closing words from you. I think it's been a great panel, but please go ahead.
Indeed. Thanks for participating. This is a fantastic summary, both from the context of capital formation as well as the fundamental shift that's happening. I think we shed spotlight on both of those. And overall, I think the takeaway should be that even though the bull market run has been going on, there are very fundamental structural issues which lead us to be very optimistic about the future broadly. There will be winners, there will be losers, as usual with the Darwinian selection happening. But at the end of the day, fundamentally more new medicines and more financings will be there to take those medicines to the clinic. So that's the net takeaway.
Wonderful. Well, thanks all for participating today and making time for this session.